Bill Ackman moved the market today. He says, quote, there's too much risk in the world to remain short bonds at current long-term rates. The implication being all that risk means people are going to end up buying treasuries, and that's going to force rates lower. He covered his long bond short. You had yields start to come down, and then stocks do the exact opposite, which went up. The moment that tweet came out, with his trade that he covered the long bond short, the market just flipped. Have rates topped out? Or are they in the process of topping out? Because essentially that's what matters more than anything else.
Right. I think near term, the rates may have topped out. And the reason I say that, we're coming out of an incredibly strong Q3, and at least we're going to get the exact number later this week. But that's not likely to be repeated in the fourth quarter. I think economy is going to be a lot slower. So the growth factor that's propped up the 10-year treasury, I think we can see some of that go back. We also have the core PCE inflation that comes out this Friday. We're looking for a year-over-year print of 3.7%. 3.7% on core, that's actually a really great number that's showing the inflation is decelerating. And then, we got the central bank policy. I think we kind of get it now. I think the markets get it, that it is high for longer. And so I think we've priced in the appropriate amount of that. So for those reasons, I think the 10-year can pause. I think there's another deeper story here, and that is the delinquencies are rising, charge-offs are starting to rise, corporate bankruptcy filings are starting to rise. So there is definitely some weakness that's emerging under the surface. So that's why I think Ackman was saying that there's definitely risks that are impossible to ignore.
Yields are up, stocks down, yields come off, stocks go up. Is it that simple?
Well, I don't think it's simple at all. I think we're going through this whipsaw environment where people are trying to decide whether we're okay with the 10-year going down or we're okay with the 10-year going up. Is it sending a bullish signal or a bearish signal? And I think one of the biggest things, I know I've been talking about this ad nauseum, but is the yield curve inversion and the fact that it got down to the narrowest level since a very long time. We got down to 12 basis points today. We're back to 22 basis points inverted now. But that's a really small level. And thinking about the idea that it's not the yield curve that causes a recession, right? The yield curve doesn't actually do anything. It's more the signal of what capital looks like in the economy right now and what people's expectations are for the economy. Mm-hmm. And at some point, I do think the 2-year will start to come down, which will then send a more decidedly negative signal for what might be to come.